Yeah, this is Kitten Features, and you're listening to ShowX Live with Ken in the student accommodation all the way in Scotland. Wait, that was years ago. You're listening to ShowX Live with your favorite Scotsman Ken, currently residing in the US of A, and Wayne, mostly from Colorado.
Hey, wait a second. I'm on the show too, and I don't get any billing at all? Well, I know how to solve this. Soldater, Fremad, March! You're listening to Show X with our favorite Scotsman Ken, our child of the corn Wayne, currently living in Colorado, and Todd, who now has an army of angry Norwegians at his back. Enjoy the show!
Hello, everybody, and welcome to the show. You're watching us live at 2 p.m. Eastern, 7 p.m. GMT this Sunday, the 7th of February, 2021. And we want to welcome you today as we are going to be talking follow-up to what's been going on in the past couple weeks, our take on everything that's been going on with GameStop, with Wall Street bets, with investing in general, and how it has become a bit more of a, I don't even know how to describe it right, but every man's sport than it has been in the past. And so that's going to be the main subject we're talking about today. For anyone who hasn't basically heard it, you hopefully, being that we are gamers, that we all out in the world have at least heard something about what's been going on. I know personally, I saw a lot of memes go through on social media and people discussing how they themselves have never felt comfortable with the stock market, with trading, investments, and things like that. Even a lot of my friends who, you know, have jobs that allow them to invest in their retirement in the form of 401ks and things like that, had pretty admittedly said that they didn't do anything besides say that they were investing. And honestly, that's something that I even found myself pretty much in that boat, where for the most part, I just really aggressively said put all of the money I could each year without getting taxed excessively into a 401k, because however many years down the road, that should do good for me for retirement, and I should eventually be able to sit on my butt, play video games, and not have to worry about bills, right? That is like Wayne's goal for ending life, retirement kind of thing. You know, be able to go play, travel, do what I want, because I did well up front and hopefully enjoy.
The goal is for when you become a fixed income person, for that fixed income to outstrip your bills by some amount.
Yes, that is
right? So that you
more
can,
refined way
so
to put it. Yes,
spend your golden years spending
versus earning. Exactly.
Yep.
So with that, at least, you know, what, for those who aren't aware, a quick recap is that a couple weeks ago, and I don't remember the exact date when it started. I think it was it the 4th or something like that, one of the big buys? Oh no, it was earlier than that, because that's just this last week. But there was a...
It was January 20-something. Like 21st.
So a couple weeks ago.
Maybe even before that.
And you can check it. Actually, I can check it real quick by looking at GameStop stocks, right?
Yeah, right.
Just look at the history on it.
Everybody go into your Google search and hit $GME.
Right.
And
you
laugh.
Well, but
cry,
there is a story to be told about it, right? And that's the key. There's a story to be told about what happened. So essentially, where this began is that a group of, well, there are groups out there trying to keep track of stocks across the board and figure out when and where to invest money and when and where to pull it out, right? Always the goal to, in general, you know, buy low, sell high, or whatever it is you're doing to try to incur more income from the market. Like we said in the pre-show real quick, I do equate it essentially to white-collar gambling. It's just doing it instead of having to go to Vegas and bet on specific events or go play games and cards and stuff like that. It is based on some representation of what is happening in the real world with companies. And I say that with a lot of, I don't know, I'll get into my thoughts on that later. But the GameStop stock essentially was on a list of shorts. And for people who don't understand what a short stock is, Essentially, it is where you look at the value of some currently traded stock and expect it is going to go down in value. And thus, what you do is you buy some number of shares of that stock at its current market value, and then immediately send them back, basically loan them back to whoever you bought it from, back to the market to be traded on. And or you're not sorry, yeah, you don't buy the stock, you borrow the stock, essentially saying that you're going to pay for it after. Thank you, Todd. Yeah, reverse that.
Yep.
You borrow the stock that you'll pay it back at another price in the future. And so when you do that, if and when it goes the way you hope, the stock goes down in value, you then buy those stocks that you had borrowed from the market and give them back to who you borrowed it from. And if you did that at half the price, basically, of what you'd originally loaned it at, you maintain all that value back for what you bought. And so you basically just get free money.
I heard a good analogy the other day for this, because I was struggling to understand it. This is a good analogy. You've got a neighbor who's a Marine and recently bought a PlayStation 5. When he's away, he says that you can play that PlayStation 5 and it's yours while he's away. In reality, you probably wouldn't want to sell it or anything, but let's just say that you notice that you could sell it for twice as much. And your neighbor won't care if you sell it, then buy another one for cheaper, so long as he gets a PlayStation 5 back at the end of it, he won't care. Even if you make $500 on selling it to somebody else in the meantime, because the value of the PlayStation has changed. The problem with GME, if you want to go into follow the analogy, Wayne, if you want to continue your story.
Yeah, the continuation is that when that happens, there's twofold. But to understand the risk of doing a short stock is that if the value shifts and the company gains value while you're waiting to sell, then you still are responsible for returning those amount of shares that you had loaned. And so if it doubles in price, you now have to buy those stocks back at the double price to get them back. And so you may have to come out of pocket for that risk you took. And so that's essentially how it turns out. To finalize that analogy to what Ken's saying, that yes, if then the Marine came back and wants his PlayStation 5, and at the time that he was gone and you had sold it for, say, $700 or something because you thought, oh, I'll have all this extra money, the price of acquiring a PlayStation 5, like in today's market where you can't go to the store and buy one off the shelf, you may have to go on eBay and buy one for $1,500 or something, because you better believe that Marine wants his PlayStation 5 back or you are going to suffer. He will end you in some way. And so regardless of the fact that you may not want to have to spend $1,500 on that PlayStation 5, you have to at that moment. And there can be negative actions taken upon you if you don't, essentially. Legal action, things like that and such. But that is a quick way of encapsulating the methodology of a short stock. To speak to what was happening with GameStop, we all know that as gamers, and this is where it should hit home for us a bit, GameStop, whether you love, hate, or whatever, it is arguably, their model for income has suffered significantly in recent time. And not just due to pandemic things, but even prior to that, GameStop was going on the way out, since less and less people, newer consoles don't require physical media, and their major way of income was reselling games from people, buying them at ridiculously, obscenely, got me angry prices when they would offer you, a quarter for a game that was worth $50, and then turning around and selling it for like $40. Right, and they were just
I was at GameStop today. They're selling God of War for a used version of God of War for $28. You can get it on the PlayStation Store for $7. Why would anybody go to GameStop and spend almost quadruple the price?
It shows how far behind they are.
Yeah, no, there's a lot going on. One, brick and mortar retail is a dying industry. Right? Yes. I mean, Amazon has become essentially ubiquitous globally. There are a few places, Norway, for example, where there is not a Norwegian. There's not a Norwegian Amazon. There's an Amazon.no, in part specifically to protect existing brick and mortar retail. So we have to order it from the UK or Germany or wherever, and then pay import taxes when stuff comes in. So the brick and mortar retail is dying. GameStop, as we just discussed, has a business model that is problematic inside the dying industry. Like, as we said, physical media is not the way you get video games anymore. It's all done via digital download. So PC, console, it really doesn't matter. All of that. All of the sales are now done, or all of the acquisition of new games is all happening via digital download.
Yep.
So it looks like GameStop as a business is probably in a fair bit of trouble.
Yeah, it's definitely not been on. It's not showing any growth and hasn't for years.
Now, I want to give the other side of this, because there are two things I want to talk about. First of all, there was a guy who bought like a 15% share in GameStop a while back, who was a big online e-commerce guy.
It was that was deep effing value, right? The
No. This is prior.
Oh, okay.
Yeah, this prior. He was going to be the guy he was joining the board, and he was going to sort of help them.
Yeah, it's someone who was actually invested in the future of GameStop.
Switch their business model to be more digitally focused. So the other thing is that and unfortunately this is going to get sort of arcane, so bear with me. But the central banks in the United States and Europe, and those two areas making up 40 to 55% of global GDP or global production, have told you all, and us too, that asset prices are going to be protected at all costs. And right now, because I looked it up because I was curious, that cost is $150 billion a month. And that is going to happen in Europe, it's going to happen through March of 2022. And in the United States, it's going to happen at least until summer. So that is the Federal Reserve, which is the central bank in America, and the European Central Bank, which is the central bank for the European Union, are buying securities. And that's them just dumping printed money into the market broadly. That's it. And they're doing that because you can't do anything once interest rates are at zero, right? So think of it this way. There's a direct correlation between the rate of interest and the overall health of the economy. As the economy starts to do better, you will always see interest rates go up. As the economy starts to go bad, you will always see interest rates go down. You can't go down any more than zero. So once you get to zero, you have to do something else. Now, in Europe, because math works funny in Europe, they have actually experimented with something called negative interest rates. But in the real world, because nobody's getting paid to borrow money, by the by, which is what a negative interest rate would imply. So what you do after interest rates get to zero is you just print money and you throw it into the market at large. So that's what's been going on since the beginning of the pandemic, once we knew it was human-to-human transmission and it had gone global. So figure the beginning of February of last year. So this has been going on for a year, and it's going to go on for another year. And my point to all of this and all of this arcane crap is there's really no reason to be short anything unless you're trying to kill the company.
Yeah.
So that's one of the things about a short stock, and what happened in this case with GameStop is that it was already potentially going on the down. And essentially, the mechanics of doing a short is that if enough interest, enough groups, big enough group, in this case hedge funds, which essentially are a representation of a large group of buyers, that all loop together under one entity, is basically what a hedge fund does. And so they then have massive buying and selling power because they're not representative of just one company. They have a lot of money at hand. They basically made a choice, and it was on some charts about GameStop being the highest short stock versus value kind of thing out there. I forget the exact comparison. And it looked to essentially a hedge fund came up, and I forget the name of it specifically. It will probably come up in things that we have here. Targeted GameStop, saying that they could short it, and if they got every one of their investors to do it as well, they stood to make large sums of money, right?
Yep.
And in doing so, they stood, essentially the net effect would have been to completely devalue GameStop to the point where it had no capital to do anything. Like its stocks would be essentially worthless. And in doing so, one of the net effects is that when you do short a stock and a large group do, for a moment, the value of that stock will bump because they buy a whole bunch of these shares. But then, which allows them actually, as it's buying up, to do a bigger short because they buy so much the value keeps going up. Oh, and they buy it at the higher value for the short. And then once it tanks because no one else is buying it, essentially, they get even bigger delta on the short, so they make even more money. So that's part of the strategy of a large hedge fund getting in there and doing it. They buy massive amounts, the stock spikes for a moment, they short it at that high level, and then they wait for it to crash, and once it crashes, they return all the things at the low level and get a big profit. And it crushes the viability of the company.
I did not realize that the hedge funds were playing both sides of the bet.
No, that's why this became an issue, because Wall Street Bets saw that there were the massive levels of interest in shorting GameStop. And
well, it's because GameStop, who actually buys GameStop stock before this? Most people looked at it as just as a dying company, right?
It was
so
the
volume, the frequency of purchases. You can see it's pretty steady over time, and then suddenly this huge amount of interest got shown, and somebody noticed that.
It was a very obvious. It was an obvious short.
Very easy to see. I mean, one of the things that was being talked about on various media outlets is that a high number for percentage of shares with short positions is in the 25 to 35% range, and GameStop at one point was 140% short.
Yeah, which should be impossible, right?
Which
it's beyond
impossible. B, couldn't help but be noticed.
Yes.
By somebody.
Yeah.
So their greed was their own downfall.
And somebody did.
And that's the thing. And so once it became noted, once it was made note, right, there's this group of investors we mentioned called, in this case, it's a Reddit channel called Wall Street Bets. And go there any given day of the week, and we talked about some last week as well. It's all kinds of different discussions about strategies, ideas, and thoughts around the market and what different individuals are doing with their money, their ideas on it. And just like we're going to disclaim for ourselves here that we are not money experts, we are not financial advisors, nothing about ShowX, VtWProductions.com, or anything associated is advising you on anything to do with your money. We're just reporting on what we've seen and what we may have ourselves done around it. But we're not advising you what to do with your money.
I don't know about you, Wayne, but I made $20 in Bitcoin this week before I sold it, so I'm kind of an expert.
Yeah, right. I mean, well,
wow.
The show, Todd and Wayne do not advise you guys on what to do with your money. If you have any considerations based on what's stated on the show and want to take it up with Ken, that is up to you. But I will not be held liable for what you do with your money.
So now it's Dr. Professor Rear Admiral Jedi Master CPA Ken Reed Esquire.
But the thing about it is, so this group Wall Street Bets, they talk about trading and stuff like this. Someone on there, and if you guys have names, please throw them in there. But basically the discussion came up about the GameStop short. And when it was discussed, they said, well, here's something that you can do. When this hedge fund goes in to short it, if we just keep buying the shares and the value keeps going up, and we do it longer than, because whenever you do short a stock, you have an actual contractual obligation for when you must return those shares. And so as long as you can keep the stock at a value higher than they purchased in at to beyond when they have to return the shares, they are then liable for that difference at a higher level, they're responsible for buying those shares back regardless of the value of it. And so essentially, you can drive the market up to a point where you have guaranteed purchases that are coming in at some point with all the short stocks that you can then turn around and any stocks you hold, wait for those to hit and sell at that elevated rate to make a profit from when you bought in on, as well as to then take that money, that profit money, directly from traditionally, in this case, this hedge fund investment group that were sinking millions into short a company. And the results of it, because this is essentially what Wall Street Bets did, is they created enough interest within their own community and which spread across the internet. They essentially did a raid, is how I'm describing it, where they set up a raid of investors in the real world to get together and all take down the boss. The boss being traditional hedge fund investors. And the idea behind it is that I saw a couple. There was the obvious that there is a potential for people to actually make money doing this by countering a short. But normally it takes a group so big that it's not often been done as a consolidated effort. The other is that it was a kind of a big stick it to the man kind of thing, in that hedge fund investors essentially play the market all the time and use that buying power we talked about at the top show to manipulate the stock markets by inflating stocks to a certain level, getting a bigger short, selling them to make more money, like I just said. Because they have so much buying power, they can actually affect the value of the market, of whatever the stocks they're buying. So they do it all the time, and it's considered legal. And the third is just...
We should mention a little bit something that the Ken Features and I have realized in the past 2 weeks. Is 2 weeks ago we knew nothing about stocks. We had no stocks. We'd never been interested in them.
Well, so that's a big part of it, right? Is that so the mechanics of this, and this is what Wall Street Bets, their goal was to just screw the millionaires and potentially make some profit, depending on where you're standing on it. But to basically directly target and fight the hedge funds, to say we as a small people can take your money and make you suffer. And in essence, and I don't know the final numbers, but it was stated that at the first short sell that was forced, or the rebuy, that some of the hedge fund had lost some like $5 billion.
Well, I heard numbers way bigger than that.
Yeah. And that's the thing. It's all over where I'd heard a bunch.
Ricocheted. And actually, what I was going to say is that we didn't know anything about this 2 weeks ago, right? We've been doing a lot of reading and learning. And one of the things we learned is that there's two different viewpoints that we're talking about that we kind of intermingled so far, which is the perspective of the individual and the perspective of the group. If you're from the perspective of an individual, when you're investing, you're just simply watching the ups and downs, the flow of the ebb and the going of the basically the sea that is the stocks, right? Sometimes it goes up, sometimes it goes down. You watch the trends and you buy when it's low and you sell when it's high to make a profit. That's what any of us individually generally do with stocks. Now, the stuff we're talking about right now is not the individual, generally wise way of approaching this. We're instead thinking about the groupthink, which is actually manipulating the stock market itself by having so many people interested, either through a hedge fund, where they have huge buying power through some conglomerate of companies or interests or whatever, or through this new thing, which is so fascinating, by the way. I think this is the most interesting that's happened in finances in decades, which is the common man joining together for a nearly socialist cause that is actually technically true capitalism, right? This is technically the free market. Right. And it's been fascinating to see the responses from the media, because the media has been crapping all over Reddit. They've been saying that they're just a bunch of barbarians who don't know what they're doing, what they're doing is effectively illegal.
Right? So what this brings up, this does bring up, like Ken, what you're saying, that transition point of the interest, and partly because one, GameStop, something a lot of us are aware of, even if we weren't playing the stock market, it became national news. It absolutely generated this massive uptick in just information and interest in trading and stock market and trading and how things work. Most people could arguably say they had never heard of short sells prior to this, let alone what it takes to day trade, what kind of things you can do, what tools are out there to trade, all of these different mechanics. That there's been massive growth in interest about the stock market because of this. And you're right, Ken, that this has been different from what has previously existed, because the stock market has almost always been this plaything for the wealthy, right? For people that have a lot of money to be able to move around in it. And rarely beyond 401ks, like we said, our own kind of interaction with it, something that everyday people do. You may get your handful of people who start to trade some, but even just an awareness for people who haven't learned it yet, to become an official day trader where you can move stocks around up and down throughout a day without a limit of the number of transactions you can do, you have to have at least $25,000 of cash in an actual fund to be able to do that, in a account that you can move, because you have to be able to cover your trading back and forth in case you do short something and are responsible. So you can, as an individual, if you're only moving a couple $100 here, a couple $1,000 here, do it on your own, but you can't do it more than a couple times a day unless you have 25 grand in an account. Right. And that's something that by itself tells you there's a gateway to playing in this world that most, I would say, everyday people can't hit that threshold. I don't have 25 grand of disposable income to drop in a market to just move around, right? That's it. But this is stuff we're starting to learn.
Let's back up a little bit, right?
Okay.
So there's tiers to this whole investing thing, right? So there's the retirement accounts that we've talked about. Wayne, you had one. Wayne, you have one. I have one. Ken, I'm sure you've got something, although I'm not sure. Maybe the university is not. It's not that kind of job, but maybe it is.
No, I could have it. I just choose not to at this point because life is too in flux. I don't know which country I'll be in 2 years' time. Never mind.
Sure.
I don't want to have. I don't have retirement funds in 6 different countries.
Sure. The second tier is the second tier I would say is mutual funds, and the idea of the mutual funds is, a bank or an investment broker or somebody is packaging together a set of stocks or securities and putting them together into a fund that you then invest into that fund. And based on how the individual securities in that fund do, the fund goes up or down in value. Perfect example to this, 2 of the mutual funds that I'm invested in Norway right now. One is tech. The other one is the environment. Both have been insane in terms of their returns. So, if there's a recovery on the way, thumbs up, because I'll take that all day, every day. And then the third tier is the buying an individual stock or security, right? Which is the people on Robinhood buying GameStop at 19 and then hopefully selling it at 400 and making 20x on their money, right? Like inside of a couple of days. So 3 tiers. One other thing I just want to say, I think we should be really, really careful using the word manipulation because manipulation is a legal term. Okay. And manipulating the market technically is illegal.
Yep.
And I don't think using an anonymous, semi-anonymous message board to point out that billionaire hedge funds got lost track of the market on a particular stock is manipulation.
No,
I think that's simply pointing out an opportunity.
Admittedly,
right?
And I agree with you on that, Todd, but I said it mostly because when right now you hear the term manipulation around this conversation, it tends to be in discussion that somehow Wall Street Bets and the people who participated in this activity, from the idea of buying to counter what the hedge fund short was doing, were manipulating the market, right? When I'm saying you hear that from some of those groups where, in
the
my
media narrative has been disgraceful.
Oh yeah,
and that's my feeling of it.
Like Mark Cuban and Dave Portnoy from Barstool Sports and Jim Cramer a little bit have been somewhat on this, but I've heard everything from, these people are the equivalent, the Wall Street Bets people are the equivalent to Capitol rioters, to these people are Russian bots.
I heard that too, yeah.
Right?
Funny, I didn't know I was a Russian bot.
To CNBC's credit, they had the Russian conspiracy theory guy on, and Jim Cramer like smacked that down immediately. Like he said, well, we don't even know if this is originating from inside the borders of the United States. And Kramer just was like, get out of here with that. That's insane. Like, what are you doing? And it's like, well, but that's typical, right? All you have to do is plant the seed, and for enough people to believe it's true once, and you can do it to anybody, right? So I'm not surprised at all. I want to wait to talk about what the legal ramifications are until later in the show, unless you want to talk about that now, because we're talking about the narrative. Because the narrative's going to feed this, right?
Yeah, no, we can wait on the legal side. I want people to understand kind of the what happened with it, right? And where we stand today. Topic. Because essentially, you know, that's the antithesis of the activity. I want to share a little bit of, just for context, what happened, right? And with this stock specifically. And so I'm looking back, and here I have just over the NASDAQ, right? Showing a chart, because the chart's about the history of things. And what I want you to see is this is GameStop since 2003. And you notice it's pretty low on this chart for most of this. In fact, the high it hit in 2008, right in here, was essentially 20, what was that? Oh, no, sorry, that's 63-ish almost, or 50-something dollars, under $60 a share. And then it didn't get above that again all the way until what just happened here in 2021. So now looking over
for context for everybody, 2008 would be right before the bottom dropped out on everybody in the financial crisis, right? Like the Treasury Secretary at the time, Hank Paulson, and the chairman of the Fed at the time, Ben Bernanke, still didn't know that their goose was cooked until March of 2009. Right? Gotcha. So that 2008 number, that 2008 time frame is significant because it was the very tail end of the last asset bubble in the global marketplace. And as you remember, when that popped, it almost took the entire global financial system down with it.
Yep. If it wasn't for severe taxpayers' money being injected over and over and over into mega corporations, and banks, we would have had an even longer recession.
So, where we're at today, right, as we look at this, is that in this month alone, you can see that the stock was still very low. In fact, it was under $27 a share coming into the beginning of January. And that the first uptick is somewhere here in the middle of the 12th, the middle of the day on the 12th. Now, I don't know exactly when the shorts started buying in or when their sells were meant to go, but I did see that there was chatter back in Wall Street bets all the way somewhere to like the week prior into the 14th, 15th in this time frame. And that essentially the action that Wall Street bets wanted to do when it came in force wasn't to hit until basically in here with the 21st through the 25th. That prior, there were people who started jumping on it because they're like, oh, this is going to be a movement. We're going to do this. And so they tried to get in as early as they could. And there was even some word that people had been getting in at the beginning of the month. But what really took action here, and remember, prior to this in 2008, we were at like 55 or some-ish dollars a share, that it suddenly started this spike trend in the middle of the day on the 21st, where shares started going up. And then in the full, socialized whatever group of people who wanted to jump in on the idea of countering the short, people just started going nuts buying. And so with that, and I don't have the numbers on the overall volume here, but just you can see the price effect is that it jumped all the way up to nearly $400 a share. In fact, I remember if I had seen at one point, here it has listed a high of 380. I thought I saw trading happening when this was going nuts at somewhere in the range of like 415 or something like that at a high.
Yeah, the Yahoo Finance quote has the 52-week high at 483.
Okay, so it for a moment like just really peaked out there. Yep. And essentially what that did is that for anyone who, because now you see this massive drop that came in right after it, right, this fall, it makes sense. As it was hitting that peak, people were like, well, I bought in, at under $50 a share, It is now at nearly $400 a share. Whatever I have invested has gone up, as Todd was saying, they're like essentially 8 times, right, in value. So if I had put $100 in and I sold, if I had 2 shares there and then sold at the top there, I have
$800 out.
$800, and I made $700
Crazy,
profit. You know,
That's
800%.
And by the way, that's capital gains. So that $700 you made gets taxed at like 10 or 12%. No, it's not.
That's not that bad. It's not regular income tax. Yeah.
No, it's capital gains income, and capital gains income does not get taxed.
That's
in the
right.
Same way that earnings income does.
Don't forget that you do get taxed if you have made money off that. For God's sakes, don't not tax it, right?
Whatever tool you use, look for that 1099 or whatever tax form that comes out of it, because you need that to file this year, or whenever you made your profit from last.
Big time.
But yeah, so it had that, and you had that initial sell-off, and that initial sell-off dropped it down to just over $190 a share, and then there was the next days of trading where they were like, no, hold on, we need to get it out past the second set of shorts, like however long the shorts they were, to actually impact these hedge funds. And
isn't the downtrend after that initial spike where Robinhood started restricting buys?
Yep.
So there's a combination. There's a combination of actual sales, and then, which gets into what'll be part of the legal discussion of the interactions of various entities, as we were talking about the perception of what was happening here, is that yes, during that, one of the primary tools that was being used by traders from non-major things like the hedge fund were apps, specifically like TD Ameritrade and Robinhood, as some of the main players of people moving their own money around to try to be involved with this. And full disclosure, I had purchased a share of GameStop in all of this, right? For my own reasons, such. And I talked about it last week how Linus had invested a large share, although he did a follow-up video that he put 30,000 US into GameStop, 10,000 into AMC theaters, and 10,000 into one that he thought was a meme share, but apparently wasn't. And that's what they've been labeled as meme shares, that there were several, because I think some of the others that were discussed other than AMC theaters was also, there's one that was BB something.
BlackBerry, Bed Bath and Beyond. They all had this sort of, BlackBerry being sort of the outlier, but they were retail-ish outlets that were adversely affected by lockdowns relative to the coronavirus, right?
Yeah.
There were a whole list of those kind of things that have massive short positions.
And that was the key. They were focusing on short position stocks. But the primary one was no question GameStop. But as this spike was continuing to trend up, you're right, Ken, initial thing, that part of this major downtrend wasn't just normal sell-off, but famously, or the one that got noted the most, was Robinhood, the app, trading app, stopped processing trades.
It stopped processing buy trades.
And specifically just for specific stocks. Not for all.
But you could not buy.
Yes.
And that is so important.
And it was specifically the terminology they used talking about was due to volatility in the market. Now, supposedly, and I've seen a lot of discussion on it, there are tools in place around the stock market to basically limit trading whenever there's potentially activity that could massively crash the market. Is the initial intended point of it, is that when something gets sold so quickly and so much that it's just crashing value, that they can put limits on trades and things like that. There's various mechanisms to try to avoid. But this was one that a lot of people felt was targeted, specifically at the non-massive hedge fund traders, and did not seem to be copacetic with the idea of trading.
Certainly not of the idea of a free market.
And that's kind of that conversation about what is the stock market, what is free trade, what is all that kind of stuff. And since then, just to kind of finish this up, it was, some things were opened up again. People held on. There were terms being thrown around like diamond hands, meaning people within the, specifically that came up in the Wall Street Bets thing, which is no, I'm going to hold on. to these stocks no matter what happens. Diamond hands meaning I will hold on to such strength that even though the potential is for me to get out and make more money than to write it into the dirt because of the goal they had of targeting hedge funds specifically, they wanted to hold the stock and keep the value up as long as they could, even though everyone knew that at some point it could go down. And it did. The trend here is, and it kind of falls off, and this is where I look at the 5-day, a bit of a cliff, if you will, that here on the 2nd of this month, right, it just tanked and dropped all the way from some $200-something a share down to a low point there of some, what is that, under $100 or right at $100 a share, and then kind of bounced back and around over the final days, and it is now kind of doing this continuous diminish with small spikes in there all the way up to now.
I've seen a couple of charts, though. I mean, that's the price, but I saw some charts recently that showed, I wish I had a link, that showed that the volume of stocks that have been purchased and are being held and haven't been sold on again is actually surprisingly big. Like, a lot of people are genuinely holding. The thing is here, when you think about like a hedge fund, and when they decide to hold or do something like that, they can do that quite easily because they have absolute control. Everybody's already bought it and they've all agreed. And it's almost contractual. When a group like Reddit does it, there's no binding there other than a sort of group intent, you know? And that's the problem, is that when fear gets a hold of them, when they see the media talking about it, when they see all these genuine bots spamming on Twitter, I've seen so many of them, by the way. I looked into it myself. There are definitely bots that are spamming in there, trying to say the GME is crashing, GME's sell it now if you're smart, all that stuff. And buy silver. That was another thing that was happening as well.
Which, by the way, silver has nothing to do on this because it's not a stock in the sense of like something that a company that's selling. It's the valuation of an actual material, so it's a different kind of thing.
It is also a thing that has short positions, and there were, I guess, a set of hedge funds that were short on silver.
Really?
for various reasons, due to overall silver supply and so on and so forth. With a commodity, right, which is what silver is, or oil or corn or soybeans or frozen concentrated orange juice, to use the Trading Places version. You can borrow contracts for that commodity.
Gotcha.
And then sell them to the market at a high price, and then buy those contracts back at a low price. Which
so you can still basically short it.
Is that big climactic scene at the end of Trading Places? That's exactly what they're doing.
Okay.
What Dan Aykroyd and Eddie Murphy are doing.
Yep.
Right. They let traders bid up the price of frozen concentrated orange juice contracts, and then when it got to a peak, they started selling them, which crashed the market. And then when it got down at the bottom, they bought everybody's contracts and made good. And the sort of trick to this is, especially for a commodity, if I sell 100 barrels of oil at $65, I have to make sure that I buy 100 barrels of oil at whatever the price is when I buy it back, or crude oil is going to show up at my house. And it's not just a barrel, it's like a lot of 25,000 barrels, which you definitely do not want.
I saw quite a funny meme the other day as well. People were saying, how could they possibly have guessed that Wall Street Bets is going to have no trading experience? How dare they call us barbarians and such when we were raised on this? And it showed the RuneScape marketplace, people shouting and screaming, want to sell this, want to buy this, World of Warcraft trade chat and everything.
Well, I was gonna say, I've seen a lot of memes coming out of this because there is I'll let Todd, you continue describing.
Wall Street Bets' meme game was so strong.
Yeah, no, because there was a lot of like those conversations from news outlets to actual traditional investment firms and things like that, reactions. It seemed almost universally like the big names were all saying, this is wrong, should not be done, and is somehow, as many people were even alluding to, potentially illegal in some form, right? And
Sure.
I saw so many of those same kind of memes as like, how dare regular people do it, where one of them was the comment of, hey, you need to do better with your money. You should invest it. And, save your money. You should invest it. And then it's like, hey, we'll invest. And they're like, no, not like that. Like,
Well,
no,
okay,
don't actually invest it.
But okay, there are lots of ways to invest. If we're going to use invest as sort of the broad, I have money and it's not going to sit I have money and it's not going to just sit in a simple savings account that earns nothing, because interest rates are at 0, right? So the traditional or safest, again, all of these terms are relative. I am also not a financial advisor. Do not take any of my advice. I lick paint.
I wear a helmet on the bus to prevent me from licking the windows.
Yes, I wear a helmet outside to prevent me from running into things, or to prevent me from hurting myself when I do run into things. Is probably most accurate. But is to buy into either a single stock or, like I was talking about before, a mutual fund, or to put your money into a 401k. The rate of return of the stock market as the broadest possible collection of commodities and securities and stocks and all of this kind of stuff, the rate of return on that over time beats a simple savings account by like a factor of 5 or 7 or 10, right? Outside of the big crashes, 1929, 1987, 1999, 2009, and the one that I guess happened maybe earlier this year, or a year ago, right? So that kind of investing has a relatively good rate of return to it. You can do even better than what just throwing your money into a set of securities and letting it sit if you really want to watch the market and look at fundamentals and reading earnings reports and looking at profit and loss spreadsheets and stuff. Like, if that does it for you, you can do even better than that 5 or 7 or 10% return. So that's investing. There's the high risk investing, which is what Wall Street Bets does a lot of.
Oh, yeah.
And trying to play the intraday volatility of the market and of individual securities as essentially like the craps table at Caesars.
Yeah, that's when you see like the day trading and all that, where it's the constant managing, buying, selling throughout days or over shorter periods.
And again, both are fine, both are allowed, and both are legal, right? If you have money to throw away that you aren't going to be able to take to the craps table at Caesars, it might as well day trade it, right? It's the same kind of thing. But it's not, the guys on CNBC or on Bloomberg or who write for the Wall Street Journal can't, in good conscience, give that as advice. Like, Kramer can't go on Mad Money and say, "Oh, ride the volatility wave with these, with these retail stocks because retail's dying, but there's gonna be, there's a bunch of short positions out there, and if you watch it close enough, you can make 8x on your money." Like, that's not sound advice. Like, sound advice is you get your hands on like a financial stock like JP Morgan, and as the economy starts to recover, those financial stocks are going to do even better because people are going to go back to work and people are going to want to buy cars and houses and things, which means there are going to be loans and yada, yada, yada. Like, that is more sound financial, like, advice. So I love the Wall Street Bets guys. Their meme game is really strong. They have all the intestinal fortitude in the world because, as we were talking about in the pre-show, like I bought a part of a share of Amazon and watched it like a hawk for 2 days and was like, I can't do this because I'm going to have a heart attack. Even though it's money I don't care about and was just like, this is kind of gambling money, so might as well gamble with it. Like those guys are, have all the intestinal fortitude in the world and diamond hands, as they say, and their meme game is really strong. And God bless them, and especially the people who got in at 10 or 20 or 30 or 50 and got out at 300 or 400. Like you made 6, 8, 10x on your money, like salute to you because because you deserve it. You saw an opportunity, you had the wherewithal to go after it, and you saw it through to make that money. And like I said, if you got and made you got out at one of the peaks and you made your profit, like thumbs up, good on you. And the hedge funds ended up losing their ass to the point where a couple of them got bailed, and the number that I heard was like 70 billion in losses on the shorts of all of these all of these stocks that were on this list. Yeah, it's a non-trivial number.
Well, because I had heard an injection of something like 5 billion into the main hedge fund that was losing out just to keep it from folding.
Well, yeah, it's one of them got I know one of them got 2.7 billion from another hedge fund that, oh, by the way, is related to the company that's the financial backer for Robinhood, which rampant potential criminality there.
Oh, don't worry, they've got money, and I assume they're white, so I'm sure it'll be fine. They won't face any criminal charges for that.
Well, right, and don't worry, because the United States Congress is on the case.
Yeah, right. Jesus, can we make it like a thing where like politicians aren't allowed to have stocks or have any family members who are heavily invested into these things, or something along those lines? That'd be nice.
Sign me up. Write that regulation.
Yep.
Of course. So one of the things we should do is just invent a time machine, so we can go back to 1999 and make sure that derivatives get regulated back in 1999, which would stop the 2008 financial crisis from happening, and then we would all just be
but
totally
Todd,
rich.
We're not allowed to have regulation because that's anti-free market and anti-capitalism.
Yeah,
but that's why, unless it's the poor people buying stocks, then we should definitely regulate that because that should be illegal.
Yes, absolutely.
No, that is absolutely
preview for hour number 2.
Right? Well, no, but there is loads of cynicism coming out of that about the obvious difference in rules being applied to both what is kind of advertised as what should happen and what is happening, kind of thing. Where, oh man, if I personally am annoyed whenever you see that it's such an obvious example of different sets of rules being applied, essentially.
Well, and this goes back to last week's show, right? Where narratives are already being pushed, and I can totally see where the narrative is going to become, because it's Reddit and because the icon for Wall Street Bets kind of looks like Donald Trump, that these guys are going to get demonized to the point where they're the ones who get slapped, and we're not going to look at how it's allowed that the short position for a particular company can be more than 100% of the shares for that company, and we're not going to look at why a company that's or why a corporation that is the financial backer for a trading engine is allowed to bail out a hedge fund that's on the opposite side of the bed of the retail investors that are using the app. And we're not going to talk about why only one side of a trade was allowed to be done and the other side of the trade wasn't because of volatility. Like, I don't know that we're going to talk about any of that. But Reddit sure is going to get talked about because it's got the wrong avatar.
Well, I would argue it's more of that because it's representative, not the people in power, and that
that's exactly
they're going to do
it.
everything they can to villainize the actions, such that they can maintain the status quo. And
I'd have to say that they're not doing the best job for themselves, Wall Street Bets, in terms of it being publicly accessible. I mean, if you read any of the board at all, it's filled with swearing and saying kind of ableist terms. Like I think we said before, the word retard is getting thrown around repeatedly. And I don't know, they're just not very... I don't think any CNN or Fox News can screen share somebody browsing their board to show the public because it's so full of stuff that's like not publicly accessible, and that's all going to get thrown in their face. I think they're a little bit smarter about it, and they didn't if they made it more family friendly, almost more professional looking, I think they probably would have had more.
So here's the key:
their public face.
I don't think Wall Street Bets gives a crap. Right? That wasn't their point. They're not a public group in the sense of they're not an actual company and they're not like a single entity. It's a group of Reddit people who get together to discuss whatever the heck they want that anybody could choose to jump into. And so the idea that they get villainized in some way that should stick to any individual is laughable by my thoughts. Will it be brought up as a scapegoat to a lot of arguments and discussions that should happen? I think so. I think in the same way there have been groups that have been villainized because people refused to pay attention to what was really happening in those groups, and it used it as a big generalization term to scare people. And so I think that kind of thing will happen, but I don't think necessarily Wall Street Bets should have done anything different, would be expected to act any differently than they had, because it wasn't trying to create a investing group of people that are their own company, right? It had no entity that. It's just a public forum, essentially.
There's no contractual obligatory power.
Yeah, there's nothing in it.
To a Reddit room. So even if somebody posts the dumbest imaginable post, like ZeomFG GameStop short at 140% of total shares, like all you knuckle draggers get in there and buy it all and to the moon, diamond hands, yada, 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 right?
This is not financial advice at the very end. Yep.
Yes, this is not financial advice. I link paint. I
always love their final tags.
It's like I said, these guys are so creative. Like I don't want to see them. I don't want to see them get character assassinated as being alt-right or Trump supporters or anything like that, because they're just a bunch of people who are talking trash with each other and investing in the stock market and having fun with it.
Yeah.
And so what difference does it make if they talk to each other slightly crassly or
I'm just saying that it's going to that's going to be part of their downfall, right?
So here's the thing: how is it downfall? What's going to happen? The only thing I've seen is I thought that the Reddit channel got silenced or like locked for some length of time.
Temporarily locked.
No, the Discord did.
Or Discord.
So did subreddit. The admins have talked about it since. I
was going to say. They each got hit, but those have both also come out from, and so it wasn't even long term there. But even then, it's not like it's an individual that anybody was getting hit for any of this.
Well, I know the membership of the subreddit had increased by like a factor of 3 or 4.
Yep,
since the whole thing started.
4 million, I think, today.
Yeah, a whole ton of people decided to start participating in this, which is also dangerous for them too, right? Because, I mean, the mods can only do so much, And in theory, they do it for free. And somebody goes on there and starts using like a foreign alphabet to start posting trash or whatever, like bigoted trash, which supposedly was what happened to their Discord server. Right? Somebody went in one of the Discord chat rooms and used the special characters that you can, type in on your using like Alt in your keypad.
Yeah.
To post a bunch of hateful stuff that induced Discord to nix the server. Now, fortunately, Discord caught it from every angle for doing that, and that the Discord server apparently has been restored.
Yeah.
So, but it was down for like a day, or some amount of time, a couple of days. So
it's curious to see how these, people who are like the people on Reddit are part of the community. We've all we're all internet goers, right? We all spend far too much time on the internet. We get the memes. Like I imagine some hedge fund guy who's never been on Reddit for a second in his life logging on to see what all the hype's about, looking at it and just being completely confused by all the memes, the diamond hams, the emojis,
or appalled. Right?
Yeah,
because they're talking about holding, while GME was falling by like 65% in 2 days, right? All of the Wall Street Bets posts were, not all, the overwhelming majority of Wall Street Bets posts were like, I've lost 33% of the value of what I put into GameStop, but I'm still holding on to it. Like there was a period of about 72 hours where that was probably 90% of the posts on Wall Street Bets.
I saw some crazy ones, dude. Like some of them were people who had made like $5 million, and now they're down to only plus 1 million, which is still a lot. But they lost so much money, and they're like, I'm still going to hold. I'm holding regardless of what happens. Even if I lose all my money, I'm still going to hold.
Yeah,
and that's encouraging other people to go and buy. You know that?
Yeah, no, it is
definitely affecting it.
And I'll tell you what, that's courage. The definition of courage is looking at a balance of $5 million that's starting to get eaten away and saying, nope, I'm gonna hold on to this. And as it drops to 4 million and 3 million and 2 million, well, the difference between courage and stupidity is razor thin, right?
Yeah.
And oftentimes dictated by results.
Yeah. Well, it's whether you're a risk taker or a bumbling fool. Yeah.
Well,
right.
It's also people that we're seeing. Sorry, Wayne. I know we're going to go on a break in a second. It's also all those people who were doing stupid stuff. Like everybody's saying in there, like go buy GME if you have spare money that you're happy to lose if this goes bottom down, because that's what it's gambling, right? But we saw people in there who were saying, "Oh, I put my rent money in this. I put my life savings in here. This is for medical fees."
And there were a handful of people that were posting in the forum that had bought GME on the margin when it was in triple figures.
Yep.
And for those that don't understand the arcane bits of margin, think of margin as a short-term loan, but with better interest terms than a payday loan.
Yeah.
But still with interest. So if you buy shares of GameStop at $100 and GameStop goes to 80, you have to come up with cash to cover that difference when you finally sell those shares.
Yep.
So yeah, there are people who were posting on WSB that had said that they had bought GME on the margin, and it's just like, oh, why? Like, why would you do that?
No.
I mean, over the years, we've seen multiple bubbles happen, and it's not an unknown thing. This is a term that existed long before GME, right? The idea of a bubble. And it's the idea of this inflation of the amount that a share is worth or a stock is worth, and then eventually the bubble pops, usually from fear, right? Usually people say, okay, that's risen quite a bit. It starts to slow down. People say, jump, sell, and it shoots down. And that's not a new thing. And yet all these people who didn't know anything about stocks jumped in because of GME, poured money into it because they knew they could make money off it, and other people have done, and they didn't realize that the bubble was about to burst.
Well, so usually when a bubble inflates and bursts, it takes years, right? I mean, the inflation of the bubble that burst in fall of 2008, spring of 2009, started to get inflated in 2002.
Yeah.
Right? So we very rarely see bubbles inflate and burst in the span of 4 days.
That was a special thing. This is one of the history books, by the way. Like, all those stupid memes are going to be in history textbooks and finance textbooks for years.
Yep.
What are diamond hands? Answer in 300 words.
Yes.
So, we've definitely seen where this has been a volatile thing, and it's extended beyond the GameStop stock specifically, but this is kind of I'd say the foci of what was happening around all of these different shorts and purchases and such. It is time for us to take a break. A little pass. I don't want to hurt all the Ionises in the chat. And so we're going to take a break. We'll be back right after this song, about 4.5 minutes. Another OC remix, this one from Flexstyle called Dive Kick. It's okay. I still made money. And so we'll be listening to this one in the break. Be back right after this to talk about some of the legal fallout, as well as to read an email from Ionis as I check to see that it's in there.
Oh, that's the rest of the show.
And then we will be back right after this, everyone. So you're watching ShowX here on Twitch, on YouTube, and all the places. Please tell your friends. They can jump in and join as we're going. And we'll be back right after this. Maybe. If it actually... Come on, play the song.
And there we go.
There's the song. All right, we'll be back.
listening to ShowX on VtWProductions.com.
Hey everybody, and welcome back to the show. Like I said, as we get out of here, starting this side, we're gonna be talking a few emails. So let's get those going. Reminder to anybody emailing into the show that the email address, if it's been some time, is VtWShowX@gmail.com. All right, so first one coming in from our good friend Ionis. And, it's a challenge email, so let me make sure my water is ready to go. All right, this is a cleanup email. So it's coming in saying, free speech, my arse, commentary about censorship and cancel culture. For this one from last week's show. And it says, from Ionis, there used to be two newspapers in old Soviet Russia. One was called The Truth, and the other was called Good News. They said that if you read The Truth, you wouldn't get any good news, and in good news, there was no truth. Hi, hello, welcome to my TED Talk / SNL skit on ShowX. Today, I would like to make all of you depressed and potentially suicidal about the state of our society. By quote, our society, I understand this American-centric, English-speaking virtual pseudo-tissue that we share across the so-called Western world. Of course, Western world isn't exactly the Western world because West is a globe lie. We live on a flat earth, deal with it, okay. We glorified and, to a certain degree, fetishized democracy and everything involved in the democratic process. You have people jerking off to freedom every single day. They love watching election gangbangs and free speech anal messages with stepsister and those damn Vote Now videos. You've seen them, right? They do them with famous people or just regular Janes and Jones. It goes something like this. Quote, go vote! Vote now! It is really important. This election, you have to vote. I voted with my two closest friends. Vote now! When my boyfriend was out of town, I went to vote with his father. I voted myself and my husband recorded it and uploaded it online. I became a viral sensation. Vote. Go vote. Have you voted yet? I voted so hard yesterday my neighbors called the police. I told 5 friends how I voted. Then they told their 5 friends. Vote today! I just turned 18 and went voting for the first time. It was a little awkward, but I've heard it gets better in time. Every vote counts! I was struggling with voting for a long time. I blamed myself, stress, bad eating habits, lack of sleep. Turned out, however, all I needed was a good candidate to vote on. Now I vote regularly. Will you vote? You know you should. I've often fantasized about voting with a group of strangers, all of us, together, voting at the same time. I finally did it last elections. It was amazing. You should try voting yourself. Don't let others vote for you. Vote! But come on. Okay, he continues. I hated those videos because if you don't know the first thing about economy, politics, history, or international relations, you really shouldn't vote. Oh, shock! Horror! But seriously, if you don't know a first thing about economy, how am I supposed to make an informed decision about which candidate proposes better solutions? Not just sounding better, mind you, but actually having more merit and chance to be implemented. I want to highlight the word informed, because this is a key factor in the democratic process. Electorate must remain informed, and it is partially the job of the press to keep people informed. That is the theory, right? Well, it doesn't work in practice because no one really wants to have an educated electorate. Can you even stretch your imagination far enough to envision electoral process in the society of well-informed, educated voters? It wouldn't look anything like we've ever seen, I can promise you that. Our oh-so-modern education doesn't teach us critical thinking, doesn't even attempt to make us skeptical, and doesn't differentiate between knowledge, understanding, and comprehension. And once you're out of school, it only goes downhill from there. And tertiary education is actually too late. Tertiary. And then we got the internet. This almighty broadcast yourself or give everyone the power to create and share ideas made us see Twitter or YouTube as some great open market of ideas. And as crazy as it sounds, for a while it actually worked, because TV and press in general was absolutely disconnected from the real world. I cannot believe how people with access to multiple 24-hour news channels can know so very little until I actually watch some of it. It's garbage, absolute rubbish. You can't watch without drinking heavily. Online influencers didn't become influencers because they are brilliant people with amazing insight. They just use the uncritically thinking public the same way old school media did. They got the platform to broadcast themselves. Well, now give it a few years and the world wakes up to the absolute online shitestorm because people weren't taught to say, wait a minute, I actually cross-checked the info with a peer-reviewed study and those frogs aren't gay at all. Sure, you can ban Alex Jones and feel better about yourself, but people will find someone just like him, only better at dodging ban hammers. We all know the old truism, pen is mightier than the sword. And we sort of grew to understand this as something good, because we always identified ourselves with the pen rather than the sword. But if the pen is held by a racist, xenophobe, or homophobe, we somehow think the sword or banhammer will make any difference. YouTube is full of, quote, owning videos of Ben Shapiro, Jordan Peterson, where those two well-educated, well-spoken, and used to spotlight gentlemen, quote, school some random people in a 4-minute video clip. Wow, what a zinger! Sit those men down with equally eloquent people and let them talk. Not debate, just talk. Conversations between Jordan Peterson and Matt Dillahunty was 2-hour delight that made me re-examine what I thought about Jordan Peterson. And yet, Matt said himself, some people were strongly against him talking to the Canadian professor because, quote, you give him a platform. Well, I'm glad I had the pleasure to listen to that conversation. You don't destroy ideas, you can only counter them with other ideas and educate people not to accept any old junk. But again, if people stop believing junk, how will the old media or politicians get them to pay attention to them? So let's just cancel people and use blanket statements about their positions. Or even better, dig out something they said 10 years ago, use it out of context, and create online mob to harass them. This will clearly make our society better. Listen, I don't say I have any answers, and I'm not exactly against removing from conversation certain people, but we didn't inherit freedom, democracy, and apple pie to keep those values just be constantly fought for, because even the sex doll must be blown up once in a while, especially if you want everyone to vote using it. I don't know, I probably owe you guys some dick humor after this dry paint of wall text. Sadly, my dick has been out of commission since I voted last time. I will try again next week. Shout out to everyone who doesn't want to cancel me yet. Good night. It's an attachment for Roomba. It takes it from suck to blow. Yes, dating ourselves. The challenge is I don't think that one was actually on topic at all. And I think Stephen Fry did the best job showing that it never quite maintained topic. It was just fighting each other, basically. It was attacks. So, with that and that great commentary on the ideas of kind of where we go with the potential of limiting conversations and things like that, that is a subject matter that I think can continue to be discussed all over the place about when things may or may not be appropriate, how to go about it, and just seeing all of the challenge that's here. Yeah. Wait, what is this? Serathis said, Holy Dead Air Batman. What? You should be able to hear us. Oh, wait a second. Oh, no. It kind of did, kind of didn't. It was one channel got muted and mine did. So, yes, when you were talking about that, it did get muted. Going out to everyone. It went out to a channel, just not to their channel. So that was my fault.
So it's only Wayne that could be heard so far.
Yeah. No, I fixed it as soon as you said that. I was like, wait, what? Where did it? Yes. Right. So your whole discussion about how Ionis caught that. Please share again just your thought on.
Yes.
Like basically this discussion about Jordan Peterson and other things Ionis, they could check out.
Monk debate, Jordan Peterson, Stephen Fry against a preacher and a New York Times journalist on political correctness, whether it's good or bad. The other one is do a Google search, Eric Weinstein, gated institutional narrative. Look that stuff up. In particular, one of the things you want to look for is a podcast with him and his brother Brett, where they talk about this at length. He's also talked about it with Dave Rubin and some other people. But you're going to see the gated institutional narrative in practice, in real time with this Wall Street Bets story as it goes to completion. And I posted a link in the chat to an article that compares Wall Street Bets to 4chan. Yeah. You just reading it, I just started skimming it, and it is hilarious.
So that was my fault, everyone. Coming out of the break, I had unmuted myself and hit the wrong button to unmute Ken and Todd. So that was my fault. I apologize. To get us continue back on towards track of what we're talking about this week, we have an email as well in from Serathis. And this one comes in saying, GameStop Moon Trilogy Edition. Yeah. And it says, Dear Show X-Men, so I started to write this email back in December, trying to remind everyone to vote in the Mod of the Year contest on ModDB. But that kind of passed ages ago. Do check out what Glorious PC Gaming Modder Race came up with for infinite free content this year. So instead of gushing about how Doom maps still make it on the best player created content of 2020, I'll gush about how Amori is one of the most fun RPG maker projects I've played. Now calling it fun might be a stretch. It left a gaping void where my soul used to be, but at least we got something Undertale-y until Deltarune releases. Or Deltarune, yeah. Best described as Earthbound meets Yumi Nikki in Amori, you and your pals, all in pajamas, track down your missing friend. Battle space aliens, robots, bunnies, spider bunnies, and planets. This will be with a better-than-average RPG Maker battle system. Some really neat art for said battle system and serious kick-arse music. Just ignore the monster. The monster is not real. It can't hurt you. You also literally climb a ladder to the moon, which is nice. Okay. Another game. Oh, see, I thought going to the moon would totally have been just about the GameStop thing. Another game where you do stuff on the moon. Disosphere Program, also known as Not Dark Side Phil in DSP. You are piloting a robot consuming the resources of an entire solar system to build a big orb around their suns. In other words, Factorio, but with space exploration mod. Automating and researching stuff, eventually building up interplanetary logistics. So far it's in early access because of course it is. Features complete, but a whole lot of quality of life stuff is missing. Up to and including key rebinds. Also, there are no aliens in the game at all, at least not yet. Combat is planned at a later version. But do you know what really goes to the moon? GameStop! Apparently. My favorite MSM take on it was that this is somehow anti-Semitic. Certainly a hot take. Low-key admitting over-representation of a ethnic minority in the banking system and media politics. My second favorite take could be described as, how do you do, fellow short-squeezing, gamer-gating, basic-dwelling, incel, MRA, fascist, misogynized Nazi? Those evil Jews are shorting on silver. We all should buy silver stock to ruin them. Interesting how everyone...
I haven't seen anything from that subreddit saying they even like video games, to be honest. I've not seen anything to do with that.
We've seen other connections trying to be made between every group you could associate out there very loosely, is something basically what Todd has been saying from last week to this, that there are people trying to make cases that it is all some nefarious group, like last week was mentioned, could be tied all the way back to Gamergate, if you would, which is garbage.
I don't know how they're doing that. I mean, I get that they're all like some online community and so on, but I don't get how they could possibly...
Have you seen the length at which people will connect spiderwebs for narratives?
These things are not designed for you and me and Wayne and our audience. They're designed for the normie who's going to write a letter to their congressperson. It's like, how dare you let a website full of racists bet on the stock market, right? That's the idea. Like, you form the narrative not to influence us, because I can't be influenced. Not in that way, at least. Not by CNN, not by the New York Times, not by the Washington Post, not by CNBC, maybe by CNBC, maybe by Bloomberg, right? But it's not for me.
Crap and some will stick, yeah.
Right, exactly. And in this environment in which I don't know what you want to use for this for these kinds of arguments. Critical theory, grievance studies, whatever you want to use for these arguments, they're effective. They work. Label somebody a bigot, and they hold that label for a long, long time. And to Ionis's email, forget about 10 years, try 30. Right? There was a Boeing executive, C-level executive, who lost his job because in 1989 he said he wasn't sure if women should be able to serve in combat. Right? So, like, I had, and I've talked about this before on the pod, but I have had 10 years of my social media history laid out in front of me and have been pointed at posts that I've made and been asked to answer for them. And it's a harrowing experience.
Yeah.
Right? Now, imagine that, but without any sort of intent, without the ability to answer for what you've said, and oh, by the way, your livelihood's on the line. Right? It's scary. This is scary stuff. We should not be we shouldn't be joking around about it. We shouldn't be playing fast and loose with those kind of labels.
Yeah, false accusations are horrible, but that doesn't belittle the real ones either, though. I mean, if they're maybe, like, I'm sure there's some people on Wall Street bets subreddit who are racist. Like, just because, I mean, there's 8 million people in there. There's going to be a large chunk of racists in there just because of the sheer number, right? There's probably a few thousand at least racists in there. There has to be. I imagine more. But I don't think there's any more. As far as from what I've seen anyway, I don't know how there could be any more there than other subreddits. I just feel like it's just a sort of average group of people who you could argue maybe they have a bit more money than average, so therefore maybe they're more going to be racist, I guess, or something like that.
So they have a little bit more disposable income. They talk to each other in a fairly, by polite standards, fairly crassly.
Yes.
I would say, which, by the way, there's nothing wrong with that. And there
is something wrong with the way it can be done. I mean, calling somebody a moron or an idiot is generally seen as acceptable, but if you call somebody a retard, it's generally seen as a kind of a slur and kind of unfair to say because it's ableist, right? You're just basically mocking a group of people who are disabled, and that's not very kind, is it? So it depends. I mean, I see.
So that's the thing. I would never use the word retard to somebody that I knew was mentally handicapped.
Sure, but that's the point. It's like saying the word gay as an offensive term. You wouldn't say it to somebody who's actually gay as an offensive term. You'd say it to somebody who's straight. But it's still a homophobic thing to say because you're basically saying it's bad, right? So you call somebody a retard.
The key is using any label that, when used as a negative term, thus you're saying anyone who actually suffers from that condition or is a certain way or whatever is by general terms negative.
So the only I don't want we won't litigate this now. I really struggle with this idea that we can't use any sort of shorthand for calling something less than optimal or not good, right? Like we don't. Yeah, I struggle with that. It makes the language very banal, and it's very hard to try and scope one bad thing from another bad thing.
The argument is
like
to say
I would
for creativity.
No, the argument is to say things what they actually are versus using another term to help describe it that is representative of another group. And
right,
that
fine.
is the challenge. But yeah, no, I understand. And from coming from the same time frame, Todd, as you are, I still find myself having a lot of those core things I've learned primarily in the 80s come out on occasion. And in those same things that I know today are problematic that I try to do better about, it happens because to me it's still that was common and was very fluid in language back then. And sometimes that as a core still comes out and I'm like, but I mean, it's just this. And I say it, I'm like, yeah, I could try not to do that anymore. That's where I'm at with it.
So everything that's bad is just bad. That's fine. I can do that. It's boring.
I understand the challenge.
I disagree. I think it's much more effective. I think it's ineffective. Calling somebody like the word retard, and again, I'm sorry I keep saying it, I really do dislike the word, but calling somebody that is less effective than calling somebody an ignorant fool. You know, because if you call somebody an ignorant fool, that is hurtful. That's descriptive, and it's implying it's their fault. Whereas if you call somebody a retard, you're just saying you're part of a group that may have mental deficiencies due to neutral and that sucks.
Right? I mean, I don't use any of those words when talking to other people, so it's not like it's that big of a deal. I just like I said, I don't know that I would use ignorant fool in a sentence. Like I would probably, my version of shorthand is probably something like, that sounds really dumb, is honestly probably what I would say.
And that's absolutely fine to say, right? There's nothing wrong with that. And generally speaking, I don't think I've ever called anybody an ignorant fool or a retard, because I don't need to. Because I don't speak to people who, if I feel the need to start throwing around slurs at people, then I'm not talking to the right person.
Well,
right? I don't want
to and to be real, I'm a total shut-in anyway. So besides you two and the Mistress of Giggles and my boss, I don't talk to anybody.
I hope you're calling nobody in that group any of those names.
No, of course not, obviously.
So, that aside, we were coming back from the break. Actually, do I need to finish that last bit on this one? I don't want to not give all that is due for Serathis' email. He said the last piece of it, interesting how everyone but Wall Street Bets was saying that WSB is going to buy silver. It sure had nothing to do with all those silver hedge funds that have been sitting on for years, waiting for the price to finally go up because it was stagnating for years. That coming to us from Serathis. But we were going to talk a little bit in general about the legality of the things that happened around this, because we talked about how Robinhood shut itself down for the moment, and I even got a quote coming in from Cryptic that basically was their post, their legitimate, like what they put out there, stating that this is from their Robinhood, the app, saying, for Robinhood to operate, we must meet clearinghouse deposit requirements to support customer trades. Deposit requirements are determined in part by how much stock a firm's customers hold. If a firm's customers' holdings are volatile, a broker, in this instance Robinhood, is obligated to meet higher deposit requirements. Last week, in part due to the volatility of some popular stocks, Robinhood deposit requirements rose tenfold. The combination of the deposit increase and extraordinary increase in volume on those particular symbols led us to put a temporary buying restriction in place on a small number of those stocks. We had to take these steps to limit buying in those volatile stocks to ensure we could comfortably meet our deposit obligations. We, and this is in bold, didn't want to stop people from buying stocks, and we certainly weren't trying to help hedge funds. And we hope you take away from this that at Robinhood, we stand with everyday investors participating in the markets. Standing by our Robinhood community means being there for our customers through any trading environment. We'll continue to improve as we break down barriers in the financial system to open it for all. Thank you for being a part of the Robinhood community. So that is something they posted.
No,
as a response.
I don't buy that for a second.
I will admit, I also have a feeling of like, Look at that damage control that you guys spun out there.
Yeah.
That my cynicism makes that challenging for me to,
Volatility.
to agree. Like,
and to be fair, there were some big names that jumped on this story as it was going on. As soon as Robinhood put the kibosh on buy orders, and that's sort of the other thing, right? That email doesn't talk about, I don't think, is that they only stopped buy orders. They didn't stop any sell orders, right? And so when it came out that Robinhood was not allowing buy orders for that whole class of heavily shorted, we'll call them retail stocks, just so we've got a shorthand for it, right? They did it for the whole set, and got people like Mark Cuban. We talked about it earlier. Dave Portnoy went on, I think it was CNBC or Bloomberg, maybe. No, it was CNBC. Dave Portnoy went on CNBC and called it criminal, right? And some like our audience may not know who Dave Portnoy is, but I like sports too, so I know who he is. And for him to come out and say something like that is kind of a big deal. For Cuban to come out in support of these retail investors doing this kind of thing is a big deal. For a Jim Cramer to come out in support of Wall Street Bets is a big deal. I'm skeptical that is going to carry over through the regulatory and legislative activities that are going to be happening in, say, the first half of this year.
Well, that's the thing, right? I mean, I don't understand why companies like Robinhood have the ability to decide whether something is too volatile to be buy or sold and to remove the rights of consumers to have their rights in the free market, right? Why is it up to them to decide? I think that this should be something that should be more like a court order, right? Surely this should require the stepping in of the government if anybody gets to decide when to put a restriction or a hold on the buying and selling of goods, right?
Yes, you would think that there would be regulation in place.
Well, and hopefully, if this is somewhat true, they would show the numbers to kind of pass that. But essentially, like Babs is saying, the report is that Robinhood had to come up with $3 billion to back its outstanding buy orders, but the orders to cover that 2-day clearance. What he doesn't understand is how they did not have that much money available from all the transactions they do.
Yeah, sure, it's a requirement of their business, just like it is for the average consumer to have, what, is it $25K you said, Wayne? Why is it the same trading, for a broker? Why don't brokers have this requirement of a much higher amount? Because that's apparently what's required for everybody else, right?
Right. Yeah.
Why?
It's all of that is good questions. All of that is good questions.
But
here's another good question. Do you think anything is going to happen on the regulatory side, given that the Treasury Secretary earned hundreds of thousands of dollars in speaking fees from the same people that are the financial backing behind Robinhood?
So the problem is,
I do.
Do you? Because I don't think anything will happen unless they can prove that some action done was motivated in a way that benefited them, that they could prove that it might be essentially reacting based on an interest in that company. And that's one of those weird things. I don't know how it applies directly to, like you said, speaking fees, right? Because arguably, if you're an expert in a field and a group says, come talk to our employment group about this, our business, our fund, whatever, about this thing you're an expert in, and you have a normal speaking fee and we will pay it, then it seems like, I don't know if that in its inherent state, right, is just business being done. Now, if it is, I don't go talk to other groups, I only talk to this group and they spend a lot of money on me, maybe that would be more of a potential conflict of interest and things like that. I do think you need to be very aware of any decisions being made and see if it does tie back to, like, wow, you sure made a lot of conversation. Because we don't seem to have that issue when our politicians are getting paid, hundreds of thousands of dollars by different groups that support very specific things. And then it's like, oh, look, the oil and gas industry donated almost $1 million to Ted Cruz.
Sure.
You know, the highest of any representative in our government.
Sure. Let's go back to 2010. We'll all get in a time machine and we'll stop the Supreme Court from saying that money is speech. Right? And then,
I would love for that to be revisited.
And then we've solved that particular problem. My problem is I don't know what nugget of information that a former Fed chair could have about the broad economy that investment bank people or hedge fund people wouldn't have that's worth almost $1 million. Like, what's the ROI on that?
I don't know.
I don't think it's because I don't think it's very high, which means that money's getting paid for something else.
Yeah, of course it is. Of course it is.
Well,
it goes back to what we said earlier, right? Why on earth are elected officials or anybody who works in a government position, why are they able to make any income whatsoever from any other source? It should be illegal. I think that when you serve this, and I use the word serve correctly, much like the military does, right? When you serve your country as an elected official, you should be intentionally giving away your rights to personal gains and personal income to serve a greater cause. You should not be allowed to make income elsewhere. You should not be allowed. It should be illegal. You should not have any rent. You should not be receiving interest on anything. You should not be making any stock money. You should not be getting fees solicited to you for speeches. Nothing. Why? Your salary should be all that you get, and anything else is illegal, in my personal opinion. And same with your family. They should all investigate as well.
Yeah.
Just like what you guys are when you work in a security firm, your family's checked to make sure you're not receiving any weird sums of money from foreign countries, etc. The exact same thing should happen to all elected officials and their families to make sure they're not getting paid off on behalf of the elected official as well.
Oh, hey, and Ken, I've said privately outside of this podcast that it should go even farther than that. It should be a two-step process. It's you, everybody you know, and everybody they know.
Sure, fine.
And if you can go 2 steps out and not find any impropriety, you're good to go. If you go 2 steps out and you do find impropriety, you have to explain why that impropriety either doesn't apply to you, right? Because it may be that you loaned a friend of a friend some money, or you co-signed on a friend of a friend's car. Like, it's rare, but I don't want to say that that's impossible, right? So there might be financial interactions in that way that maybe are above board for the purposes of being a public servant. The other thing is so if you can't prove that it doesn't apply to you, then you have to be able to prove that it doesn't affect your ability to do the job for which you are serving.
Yes.
Right?
My point is just that if you're a government official and you're serving your country, you should be effectively taking a vow like a priesthood to give up your earthly belongings and earthly things in order to serve your country. And you should be set up for life. As far as I'm concerned, if you're a congressperson, you should be getting paid your pension and everything for life. You do not need to work anywhere else afterwards either. You should just be set up for life because you know what? I would happily pay taxpayer money to give up that corruption. No problem. If that's the price of democracy, it's worth paying.
Nah, I don't agree with the lifetime pension. I'm much more on the other side of that. I'm in the boat of you serve 20 years to the government in non-consecutive positions to have to be able to earn an actual retirement from the government, much like the military does, so that you have to have proven 20 years of actual service to the country. But
I think both models could be successful. I question whether or not you should be able to work in an industry or work in government that regulates that industry and then be able to switch.
Yeah. Well, and normally there is some level of distance you're supposed to have to do, at least like a year separation and such, but that I have seen instances where that's questionable whether it happens, and maybe that should be extended. Side of that, though, when we're talking about the legality of all the trading and stuff like this, really what we're looking at, in my opinion, of what I've seen, is a whole lot of like old money, old power, trying to gatekeep the ability for other groups to be involved in the process, affect change, do anything themselves. And that, the meme kind of being said, like, only we should be allowed to have that level of effect on the way the market plays out. Meaning only the established, accepted groups, be it large companies, brokerages, things like that are be allowed to affect change or any major impact on the stock market, that they have a willingness to allow the everyman to play such that it looks like it's a free and open environment for everyone to trade. But the reality is they don't actually want everyone to have the same rules and same trading. They just want to give that perception. And my concern
that's why we have socialists at the top, right? It's capitalist for everybody down below, and it's socialist at the top. That's why they can get bought out and stuff. That's why we had that cash injection the past 2 weeks for all those the hedge funds that got put under by the average man, right? Well, they all got injected because it's socialism at the top.
So this is why it's so important that not that you become an expert in the greater economy or what interest rates mean or what quantitative easing is or what the role of the central bank is, right? You don't need to be an expert, but you need to have a layman's passable understanding of these things, right? Because, it's very, very easy to argue that we never recovered from the financial crisis in 2008 because using quantitative easing to juice the stock market isn't recovery. Like there's a difference between you and me and our viewers and everybody else and the level of the Dow Jones Industrial Average. Right, yeah. which is at an all-time high, and again, I come back to it. Sort of what we started this whole thing off is at its all-time high, and we're supposedly in a recession, and there's going to be a recovery. Well, I don't know what that looks like. Does do all of these indexes, global investment indexes, do they all go asymptotic? Like, is that what recovery looks like? Some of the things that I'm invested in already in Norway are already going asymptotic. So what does recovery look like in that environment? Do we start seeing like discontinuities in the price of these things where they jump so fast that it's not even being tracked as a line? Like it's just a jump? Like, I don't know. That's what I don't understand. Like this is going to sound really bad, so challenge me if you need to. But right, they started talking about recovery in 2012 in order to make sure an election popped out the right way. The right way, as in the correct answer. And then they kept telling that story because once the narrative got out, like you've got to push the narrative. But I don't know that we ever actually recovered. Like interest rates went up a little bit, but now we're back in the same. Now we're back into the same. We're injecting money into the stock markets, at least in the United States and Europe, which doesn't sound like we're in an environment that can be recovery. So I don't understand where those narratives come from. Like I just don't.
It's like a murder.
What?
It's like a murder, right? If you find somebody murdered, your first suspect is whoever benefits the most, right? And it's the exact same with this. Who does this current situation help the most? And it's those in power, right? It would be the corporations or the government, but mostly the corporations. They're the ones making bank on this. So what can we say other than every time something like this happens is because it helps the rich stay rich or get richer?
Okay. Well, then the best thing to possibly do to all those politicians that listen to our podcast, all of you, because
Al Gore, we know you're out there.
That's right. That's right.
Bush,
we are movers and we are shakers. So all of the other movers and shakers, we're peers with all of them, so they're listening. So the best thing that you could do is whatever's in the best interest of the retail investor, which would be to start looking into these hedge funds and why they're allowed to bail each other out and why Robinhood's allowed to stop one part of a transaction but not the other side of the same transaction, and look into all of that. But that's not what what I have heard, at least late last week coming into the weekend, was going to happen. Like, the congressional hearings were going to be people from GameStop who have nothing to do really with any of this.
Yeah.
Other than I think when their market capitalization was up above $20 billion, they got some funding, right? So they ended up borrowing some money, like $300 million, that supposedly was going to be used to help transform the business. Sorry, excuse me. So, but they did mention the Robinhood people a little bit. They didn't mention any of the hedge funds per se, and of course they mentioned Wall Street Bets. So they're going to talk to the GameStop executives. They're going to talk to the retail investors who found that a bunch of hedge funds had lost control of the market and were able to capitalize on it. But they're not going to talk to the hedge funds that caused the situation to happen in the first place.
Yeah, like, it's just funny how that's where again, it's those in power, right? So we're seeing the media outlets, we're seeing everybody else pointing the fingers, and the one place they're pointing is the thing that's outside their control, which is Wall Street Bet.
Give me a robe and a pointy hat and a nice staff, and I'll believe.
Well, so it's going to be interesting.
You have to take this on faith, right?
Yeah, no, I got what you're saying.
Like,
it's funny when you say robe and pointy hat. My mind went somewhere else, and I was a little confused as to what you were getting at.
Oh, no, sorry, it's the Catholic in me.
That's the Wall Street Bets apparently within you. Apparently.
Yeah, apparently.
Now, it'll be interesting to see what if any.
No, not that kind of.
Yeah, no. What if any kind of actual legal fallout comes out? Now, the one thing I'll say as we get to the end of the show here is, do you guys think that the general noise that came around this and the number of people that did jump into it from various forms, all the way up to kind of the stuff you heard from Elon Musk, who's famous for tweeting things out when it catches his fancy, do you think that this will have, in some ways, a long-term effect on the stock market, the rules of it, how it's played and such? If not because there's going to be some legal action, but more so perhaps because more people are everyday people are aware of the stock market now because of this, and may be more inclined to do something around it, either to partake or something, right? Because there were other fallout from, I saw things around like the same kind of mentality going to Dogecoin and stuff like that, and other stuff where it's like, buy, get it up to $1 and stuff like that. I've seen that really had nothing to do with the shorting, but it's all about people now being more aware of commodities being traded and the value of things out there that you can invest in. And is there perhaps some kind of net gain that we get because of this event that occurred?
I sincerely hope so. I hope that this is the beginning of a movement and wasn't just a one-off. I hope this awakens something in lower to middle class people that makes them realize how much money is being traded back and forth without any services or labor being rendered. I hope that they realize that there's people out there who are making money off of nothing, and that's something that's generally, in my opinion, unfair, especially considering the sums of money we're talking about. I also hope that they realize that this is a widely corrupted sphere of the economy, right? I mean, Wall Street in general, it's dirty trading. A huge amount of it is dirty trading, with either using insider knowledge or it's using funds to do things like shorting and using conglomerates to take down smaller businesses. It's cannibalistic, and it's disgusting. And I don't think it's actually helpful for us as a community and society to have an economy based on such a system. And I'm not saying this is going to be the solution to it. I don't think it'll be anywhere close to it. I think that the only way to get there would be 100 years' time. I don't think we can do anything in the next 10, 20, 50 years, really. But I hope this opens our eyes and makes people more educated on it so that we can get the kindling required to start a movement like that. That's what I hope for.
Todd, do you think we'll see that effect or some effect?
So the ideal case is that questions about why you should be able to short more shares of a stock that exist in the real world, like those questions get asked, and it leads to some real world, small but real world changes that benefit, shall we say, the retail investor, and the average everyday kind of person who doesn't know from investing and just wants to put money into the market because it's a better rate of return than a simple savings account, right? So you can't short more than 100% of the number of shares that exist for a company. That either you have to shut down all of the trading for a given security or none of it, but you can't shut down one side and not the other.
Yep.
By the way, it's not the trading app that shuts down the one side of that shuts down the trade or doesn't shut down the trade. It's a regulatory body that shuts down the trade. And if the trading platform gets into a point where it's insolvent, like that's what the central bank is for.
Yep. Agreed. I agree completely.
What I think ultimately we're going to get is we're going to get the book thrown at Wall Street bets, and that it's going to be declared that retail investors acting collectively is market manipulation.
Yep, agreed.
And so what they're going to do is, for example, Reddit/r/finance will be okay, but Wall Street bets will not be okay. And anything that's Wall Street bets like. So they'll have people monitoring places like that to make sure that none of this sort of collusion, and I say that very loosely, that none of this collusion happens. And, again, as I said to Wayne, I think last week during the pre-show, like, I want to have hope, but I also know that this government is the biggest collection of corporatists ever assembled.
Agreed.
So why should I be hopeful? Like, if you've got a reason, I'd love to hear it.
There is one potential, not necessarily hope, but there is one reason that they wouldn't shut down Wall Street bets, and that's because a large part of those numbers, the 8.6 million or whatever that's now there, a large part of those numbers are bots made by hedge fund corporations who now watch it as a means to learn about the market to see any potential upcoming similar things. I think they won't want to shut it down because then they won't know where everybody will go. I think if they leave it as is, and if they watch it themselves, they can potentially I think in the future, if there's another Wall Street bets similar fund like that where they see it coming up short or whatever, I imagine that they'll know about these companies and these hedge funds will know about it before most people on r/Wall Street bets will, because they'll be mining the information, they'll be using advanced techniques and AI to look for it, and they'll invest quicker than everybody else and make more money. And that's the sad truth of it.
Yeah, but you would. So I hear you, and I don't disagree with your point at all. What I don't understand is why they weren't doing that already.
Well, I would say it's probably because they did. I'd say because they never saw them as a threat, and so they only looked at it as a mild interest point, something that someone might send the intern to look at that once or twice to kind of see if they see anything interesting. And this caught them all off guard, and that now they may be like, oh, you mean movements can affect our money? Huh.
Yeah, so if you shorted the stock heavy enough and induced the collapse of the entire company before anybody could play the other side of the bet, then it doesn't matter. Yeah, I guess that makes sense.
I could see that, but it'll be interesting to see the outcome. And for my take, I hope that, if nothing else, this does create more awareness in the public, kind of even to, I I would say Ionis's email during the thing talking about education in the public, that just this coming up in enough ways and across multiple, because I saw this throughout everything from traditional media news source type places to we're talking about it here, right? All the way down to just podcasts and people's regular conversations. I saw it in memes online of people saying, I don't know anything about money and stocks, but this thing is happening. And so I hope, like so many other things, that if nothing else, people become a little more aware, and in doing so, have a little bit of a leg up when they see something else in the future happening, and can either find better ways to learn more about that or are more apt to participate themselves. Same thing I say in the sense, a little disagreement with Ionis about the voting thing, and that I do actually, I'm okay with people who are ignorant still voting, because I feel like you need to start with everybody participating, and then work towards everyone participating intelligently. But
I don't know if I agree anymore.
It's hard, right? There's a lot of reasons one way or another on that. But until we do something compulsory like Australia, here in the U.S., where it is illegal not to vote,
You have to vote.
then I don't know what you do.
So there has to be a reckoning relative to our gated institutions.
Okay.
And they are going to have to do a massive mea culpa, right? Like at some point, the oil and gas industry is going to have to come out and go, climate change denial was bought and paid for by us. And they're going to owe the people just an absolute boatload of money.
Yep.
Right? Similar to what was done with the tobacco industry. We also need to have a reckoning similar to that with the Fourth Estate. In that, Fox News, MSNBC, the New York Times, the Washington Post, all of the major three-letter networks. In the UK, it would be the BBC. In Norway, it would be NRK. Like all of those, all of them are going to have to sit down and do a mea culpa with the people. Like our job changed sometime between, say, the end of the Vietnam War and the end of the Cold War. Our charge changed from presenting you with the facts to manufacturing consent. And because of that, we owe. Or, because of that, we are going to pay what you tell us we owe. And once that reckoning has happened, then we, as the people, have to say, okay, we understand that you, at an institutional level, have screwed up. You have made amends, and now we are going to trust you until, again, you prove yourselves to be untrustworthy.
May journalism return to what it once was.
Can you imagine Walter Cronkite existing in this environment?
No.
No.
Well, and I will say, it's, if nothing else, I do give credit where I have watched specific newscasters adjust where they lie, leaving traditional networks and doing other things, because they could no longer stomach the changes they were part. They went as far as they could to live within the bounds before it pushed them too far, and they said, "I'm out. I can't do this anymore." And I know in the past couple of years there have been some examples I took to heart where I was like, I never would have seen that coming. And that person finally basically said, I'm done. And in the nicest way they could, they basically said, my job's to tell the news, and I can't do it here.
It's happened with a number of people. Yeah.
Yeah. It is now not uncommon.
Yeah. Which I feel like is a good and bad sign. It's a good sign that there are still people that have some level of self-respect and integrity. And it's bad because it means that there are so many outlets there that are beyond what they feel are beyond integrity, right? That don't.
Yeah.
But it's also the mix of, is it better to have somebody who has integrity in the industry and fighting from inside, or is it better that they quit and announce something? I think there's something to be said for each side, and I'm sure there's people who've done both without us knowing.
Mm-hmm. Yeah, well,
I agree.
Certainly.
I agree, and I think
that is in a way.
Yeah, no, we're now just lingering on,
It's been a fun show, though. I've really enjoyed this conversation, which is surprising because if you told me a month ago we'd be talking about Stonks for an entire show, I probably would have rolled my eyes.
Right?
Opened, you know?
Well, let alone our audience, and we have just as much viewership maintaining here today as we do on most any other show, talking about tech and geekery. But I think that does also show some of that interest people have had on these events. That while people, even if you don't have any interest in stocks, something about this is like, I kind of want to pay attention to this.
It's geekery of another flavor.
Oh, absolutely.
Right?
Yes.
Okay.
Then
take us home.
All right. I'm sorry I wasn't here to do this last week. You have been listening to ShowX live on twitch.tv/VtWShowX. Thank you so much for tuning in. We very much appreciate it. We will be back next week at the same regular time. And at that point, you can tune in. We haven't decided what we're talking about next week. So if you have any thoughts or ideas of what you want us to talk about next week, you can actually feel free to tweet us and or send us an email. And we can think about it that way as well. We're always open to show topics from you guys as well. Okay, you can check us out all over the web. That's Patreon, Facebook, Instagram, Twitter, and a few other places, including our email. And you can do all those and find all those links at Linktree. So that's linktr.ee/showx. That's linktr.ee/showx. This coming Wednesday, we also have our sister show, Where My Pro's At, which will be taking part, will be on air at 6 p.m. EST, 11 p.m. GMT on Wednesday, and we'll be reviewing The Three Musketeers, which we didn't do this week because, one, I had a massive project due and I worked pretty much for a week straight, and also because Three Musketeers was really long, and we're still trying to get through it. And we have again, as usual, we have kind of contra reviews on this book, I think. So it'll be an interesting show. Be sure to tune in at twitch.tv/Where My Pro's At. You can find all the links for that show at linktr.ee/Where My Pro's At.
I have a real quick question.
Please.
Is it the Chris O'Donnell, Oliver Platt, Kiefer Sutherland Three Musketeers, or is it the less good Three Musketeers?
Neither.
Oh, okay. Oh, wait, it's the book.
The book. Three Musketeers.
I've never actually seen the films. We made it.
There are many Three Musketeer films available to you if you'd like to see. Some not even under that namesake.
But only one has Tim Curry as Cardinal Richelieu,
which is its own wonderful experience, and I do enjoy it.
Yes. Indeed.
That's actually an interesting point, though. We actually talked about on Where My Pro's At a few times about how there are lots of movies and TV shows on the books we've read, and we do want to at some point go over them, and we shall at some point. But for now, we're just continuing on with the books, and we might do a book to movie show at some point as well. Cool. All right, thank you all for tuning in. Thank you for hosting, Wayne. Very much appreciate it. Thank you for leading the discussion and having these interesting questions for us and such. And of course doing all the technical side as well. We very much appreciate it. Thank you, Todd, for being here, and thank you for your, as always, fascinating discussion. And you always bring such a knowledge on the topic that I couldn't bring, and I always appreciate that as well.
I dabble.
All I can say is I made $20 in Bitcoin, man. That's it. I'm pretty much an entrepreneur at this point. And thank you all for listening, and we very much appreciate having you all here. You make this show very much worthwhile, everybody. So we'll see you next week. Wayne.
With that, everybody, a very welcome salute to all of you out there, and we will catch you next time. Thanks for watching. We're out of here.
Goodbye. See you next zombie. Good night.